Ladies and gentlemen, good day and welcome to Solar Industries Limited fourth quarter FY23 conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahawar from Antique Stock Broking. Thank you and over to you, sir.
Thank you, Zico. On behalf of Antique Stock Broking, I welcome all the participants to the 4Q FY23 earnings call of Solar Industries. From the management, we have Mr. Manish Mahawar, MD and CEO, Mr. Suresh Menon, Executive Director, Mr. Milind Deshmukh, Executive Director, Mr. Monish Agarwal, Joint CFO, Ms. Shalini Mandhana, Joint CFO, and Ms. Aanchal Kewlani, Investor Relations on the call. Without any delay, I would like to hand over the call to Aanchal for opening remarks, post which we will open the floor for Q&A. Thank you. Over to you, Aanchal.
Thank you so much, Manish. A very good morning to our dear stakeholders and well-wishers. My name is Aanchal and I would like to welcome you all to the concluding conference call of FY23. To begin with, I would like to remind you that during this call, we might make projections or other forward-looking statements regarding future events and about the future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all relevant information timely. Now I would request Solar's CEO and MD, Mr. Manish G. Nuwal, for his opening remarks. Over to you, sir.
A very good morning to all the valued investors and other stakeholders. We are pleased to announce the highest ever quarterly revenue, which stands at rupees 1929 crores, up by 46%, and the highest ever yearly revenue, which stands at rupees 6,923 crores, up by 75%. The net profit is up by 26% for the quarter and 78% for the year, which stands at rupees 221 crores and rupees 811 crores respectively. The strong growth of our non-CIL and institutional sector, along with the exports and overseas business, were the key drivers behind the growth in our top line. These results are being achieved with the improved operational performance despite the challenges arising mainly out of volatility in commodity prices, currency fluctuations, and hyperinflationary conditions, which demonstrates the strength of the company. We are delighted to share that we have achieved the highest ever defense revenue in this quarter, and the annual revenue has reached to a milestone of rupees 400 crores, which is in line with our guidance given at the beginning of the year. Our defense order book has now crossed 1100 crores mark, which is a big milestone for our company. The order book comprises of export orders of Pinaka rockets, Nagastra, which is a loitering ammunition, and other ammunitions which are for variety of applications. We are expecting the product evaluation of Pinaka rockets to be completed in around 3 months' time, and the orders from these rockets will substantially push the revenue from defense in the coming years. On this backdrop, we are expecting the defense revenue to double in the current financial year. Our corporate objectives and business goals are aligned with the country's ambition to make our country Atmanirbhar in the field of ammunition and emerge as a major export hub in the coming years. In line with our strategic plans to expand our market presence in the country, we have acquired Rajasthan Explosives and Chemicals Limited and have started land acquisition for our upcoming facilities in south and northwest of India. And we are expecting these projects to complete in next 2 years. We are also working on our expanding global manufacturing facilities from 8 countries to 12 countries in this year. the Government of India's strong policy support and huge outlays for infrastructure projects like housing, mining, and providing a level playing field in the private sector for defense will do good for our company. We are expecting a volume growth of around 15% based on strong demand from coal, housing, and infrastructure sector. We are entering FY24 with an optimistic outlook on increasing our EBITDA margins via enhancing the market footprints, new orders from defense section, and reduced raw material prices. Looking at the upcoming opportunities, our strategic investments, we have planned capex of around 750 crores in FY24, which includes defense, domestic, and overseas businesses. Our company has also proposed a dividend of rupees 8 per share for the current year as compared to rupees 7.5 in the previous year. Now I will hand over the discussions to Achal to take you through the financials in detail. Thank you.
Thank you so much, sir. Before beginning, I would like to quote, "This year has been a phenomenal in Solar's history, where we have achieved many milestones. A few to mention so far are highest revenue and profits achieved, huge capex plan for FY24, share price achieved a major hike and crossed around 4,400 mark, strong return to stakeholders and crossing market cap of 30,000 crores, the strong defense order book of 1,100 plus crores, export order of Pinaka rockets, Nagas was successfully converted in commercial order, strategic investments, and at the end, our continuous foundation to achieve sustainable growth ahead." Now, we would like to share a few highlights for the quarter and financial year, though we have already shared the investor presentation carrying all the necessary information for your perusal on the website and the exchanges. Key highlights for the fourth quarter are: the consolidated revenue is up by 46% at 1929 crores. Explosive revenue is up by 15%, that is 903 crores. Our explosive volume has increased by 13% and stands at 135,007 metric ton. Realization of explosive was almost same, that is at 69,113 per metric ton. Initiating system revenue increased by 44% and stands at 169 crores. In the customer's basket, the top contributors in absolute terms are exports and overseas at 737 crores, giving a growth of 90%, and non-CIL and institutional sector at 379 crores, giving a growth of 91%. Coal India as a percent of revenue stands at 15% as compared to 20% in the previous year. Housing and infra revenue stands at 20% of the revenue. Defense revenue is up by 54% in the quarter at rupees 111 crores. Coming to the cost breakup, raw material consumption increased by 46% year-on-year, stands at 1191 crores. Employee cost has increased by 12%, stands at 99 crores. Other expenses has increased by 89%, stands at 281 crores. We reported an EBITDA of 369 crores, showing an increase of 40%. Interest and finance charges is at 31 crores. Depreciation has increased by 19% to 35 crores. PBT has increased by 38%, stands at 302 crores. PAT has increased by 26% and stands at 221 crores. These were the updates for the quarter. Let me now take you through the yearly performance. The revenue for the year is up by 75% year-on-year, that is from 3948 crores to 6923 crores, a massive jump. Domestic explosive quantity sales up by 13%. Realization has increased by 39%. Revenue from domestic explosives increased by 58%. Initiating systems, domestic revenue increased by 36% year-on-year. Coal India as a percent of sale is at 15% in the basket from 18% in the previous year. It has grown by 49% and contributes 1,067 crores. Non-CIL and institution has grown by massive 138%, stands at 1278 crores. Housing and infra has grown by 36% and stands at 1322 crores. Export and overseas has shown an increase of 95%, stands at 2796 crores. Defense has shown a rise of 59% and stands at 396 crores. Coming to the cost breakup for the year, the raw material cost is up by 87% year on year, stands at 4342 crores. The employee cost has increased by 22% and stands at 353 crores. Other expenses have gone up by 61%, stands at 939 crores. EBITDA has increased by 72%, stands at 1320 crores. Interest and finance has increased from 50 to 90 crores. Depreciation has increased by 17%, stands at 128 crores. We recorded a PBT of 1102 crores compared to 607, which is an increase of 81%. PAT, we recorded a PAT of 811 crores compared to 455, which is an increase of 78%. This is all from our side. Now we would like to have questions, comments and suggestions that you may have. Over to you. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, good morning everyone, and thanks for the opportunity. Congratulations for a very good set of numbers. I have two questions. The first one is essentially on the revenue side. If we look at revenue, it is up 75% YOY for FY23 compared to your guidance of 65% just a quarter back. So, given the ammonium nitrate prices have come off and we have not seen that getting reflected in your revenue so far, the sub part of the question is that how much of these ammonium nitrate prices are getting reflected, and what would be your revenue guidance for FY24? That is the first question. The second one is on if you can provide the order book split in defense between export and domestic. Also, do we have any opportunity in the propellant side, particularly for BrahMos and products? These are the two questions I have.
Good morning. This is regarding your first question. You have asked that what is the guidance on the revenue side. I would like to explain it in this way, that in this financial year, we are targeting a volume growth of around 15%, and it can go up to 20%, which will be one of the rare years in which we will be achieving a growth of around 15 to 20%. This is one of the rarest of rare year. Second is that we have recently acquired Rajasthan Explosives and Chemicals, and in this year, our businesses from overseas will do even better than what we have done in this year. And like we have shared that defense order book has reached to 1100, and defense revenue should double from the current level of 400 crores to 800 crores. All these factors will help the company to not only maintain the current top line. The reason is that we are not sure how much it can fall, but still we are expecting that prices will fall and it will make the products at a reasonable prices, which will help the increasing the demand, which we have seen that in the last year the demand was very much subdued, especially from housing and infrastructure sector. So correction in the finished good prices will help to improve the demand, but we are expecting that in this year we will maintain the top line and we will increase the EBITDA margins from 18-19% to around 21 to 22%. As far as your another question on a propellant for BrahMos, like there has been news in the media that we have indigenized the booster part for the first time, and we are expecting more orders in the coming years. So as and when it will come, we will definitely share with you.
And what about Pralay, sir?
So Pralay, we are part of their development program, and once it will start commercialization, we will definitely share.
Wonderful, sir. Thank you and all the best.
Thank you very much.
Thank you. Our next question is from the line of Kaushik Mohan from Ashika Stockbroking. Please go ahead.
Thanks, sir, for the opportunity and congratulations for the great set of numbers. Sir, I just wanted some more clarity on the order book side. You have mentioned that you have an order book of 2,944 crores, and it has been segregated between two sides, and one is defense of 1,118 crores. Sir, is this order that you are mentioning is your how the order book is being calculated? If you are receiving any advances, then only you tell it as an order book, or is it only the promise has been told as an order book?
No, as regards the defense order book of 1,100 crores plus, so we've received the orders, so we have those orders in hand. So as correctly Manishji has said that defense revenue will increase from 400 to 800 crores, so these orders are included in that. And as regards the balance order book of 1826 crores, that is the explosive order book from Coal India as well as Singareni. The tender for Coal India will start again in this October. So Coal India order book is till October 23. So once the additional order is received, we'll inform accordingly.
Got it. And another question is on operating margins, that is EBITDA margins. What is the guidance for the coming years that you are targeting to increase your operating margins? What can the range be in the future coming years?
So we are targeting around 22 to 22%. 20 to 22%.
20 to 22%. Okay. And any thoughts on the return on equity and ROC?
So currently, our return on equity stands at around 24%, and the ROC stands at around 30%. So this will remain at the current levels, in fact improve further because of the coming fall in the whatever we see as the raw material prices stabilize in the current period.
Good. So the last and final question is on the inventory days. Ma'am, any chances of controlling down or reducing down the inventory days from currently from my calculations, it comes out to be 94 days. So any thought process on those?
So for FY22, the inventory days were around 113 days, and currently it has come down to 92 days. And with current stabilization of raw material prices, we do feel that it should come down to around 80 days.
It should come down to 80 days, and this can be achieved in FY24?
Yes.
Okay. Thanks, ma'am. Thanks.
Thank you. Our next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Good morning, sir. Many congrats on a strong set of numbers. Sir, two question and clarification. So you mentioned roughly 750 crore rupees capex, and you are looking for expansion in north and south to be achieved in over next 2 years. So if you can just give a further breakup of the 750 crore on a domestic market, international, and defense.
On 750 crores, so we are planning around 350 crores in defense, around 150 crores in overseas, and balance 250 crores for our domestic explosives.
Okay. Manoj, you also mentioned that this year you are increasing international presence, adding 4 more countries going from 8 to 12. If you can just share some more detail, which are the countries you have selected, what kind of investment you will be making there, and on our last 2 to 3 years, the story which we have made in the countries like Australia, South Africa, and all these markets, how they have been ramping up.
So these four countries, as we have spoken, so once this materializes, we'll inform accordingly. And as regards the last 3-4 years investment, so we had done in Australia, that has started manufacturing. Ghana has also started. We have come up with the plant in Tanzania that is also running well. And Indonesia also has started.
Okay, so in terms of the profitability, like in South Africa, Australia, these markets is still, I mean, I don't know about the 23 numbers, we don't have the breakup, but in 22, these markets still was at PBT level negative. In 24, in 23, if you can share that which markets have become PBT positive, and if you can share that detail.
You're speaking for FY23?
Yes.
Four. So FY23, yeah, in 23 we had EBITDA positive in both Australia as well as South Africa. However, due to currency fluctuations, the currency fluctuated around 25% in respective territories. So on that account, we have losses at EBITDA level, but we see PBT level, but we see PBT positive in this year. Operational profit has been achieved in both the territories.
Okay. Also in markets like Turkey and all, which has been also quite languishing because of the economy problem in those countries. How is the market outlook in those territories?
Yeah, as far as Turkey is concerned, definitely we have seen there was a big natural calamity, and that has affected the demand in that market. But in this year, we are expecting that demand will stabilize and the operations in Turkey will do better.
Okay. Sir, our defense capex, we are talking about up to 350 crores further in current year. However, we have been constantly investing, and I think that we have really scaled our capabilities in many parts, including missile integrations and all. So the 350 crore rupees, the capex which you are talking about, it will be actually in developing the further capabilities by expanding the product basket, or it will be in the existing product basket and product line itself, like drones or missile integration in all those facilities.
Yeah, most of the capex program which we have shared for defense will definitely go for expanding the product range in loitering ammunitions, and we are also working on developing counter drone systems, and we are also developing another series of rockets. So for developing these products, we need to do capex, and apart from this, we are also working on variety of products which will require capex to establish the manufacturing facilities. And in coming years, we are expecting that Pinaka rockets will commercialize, because we have already received the export orders of Pinaka, and we need to expand the facilities also, because defense is a very different ball game, and we have the facilities right starting from high energy materials, propellants, and we have the storage facilities, we do have the testing facilities. So we can say that we have a complete one-stop solution for most of the defense programs. So to expand this kind of strength which we have developed, we need to do capex so that we can absorb new technologies and develop new product as well.
Thank you. Mr. Rohan Gupta, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Dhananjay Bagrodia from ASK. Please go ahead. Mr. Bagrodia, your line has been unmuted. You can go ahead and ask your question.
Hi, can you hear me? Hello?
Yes,
Hello?
please go ahead.
Yeah. Hi, sir. Congratulations on a good set of numbers. Want to understand, on your balance sheet, our net working capital has really has reduced net working capital days year on year. Any reason specifically for that?
You're saying net working capital.
Yeah, net working capital. Your working capital days.
Working capital days, earlier it was last year we had closed around 90 days. This year the days are around 95 days. However, to mention, and we are targeting it to come down this year. However, to mention that, in fact, the debtor days has come down drastically along with the inventory days also. But along with that, the creditor days has also come down. So as a result, it's showing 95 days. And we are targeting around 85 days in the coming year.
Targeting 85. And so, what in this quarter our growth was substantially higher than what we had also expected. Any reasons particularly regarding that?
Sorry, didn't get your question.
So in this quarter, was there any specific reason for such high growth comparatively than what we had expected? 1928. Was there any? Was it more realization led, or was there volume overall in the segment?
Not actually, fourth quarter is always a good quarter for our company. As a result, the growth is there.
Okay, sure. Thank you.
Thank you. Our next question is from the line of Noel Vaz from Union Asset Management. Please go ahead.
Yes, thank you for the opportunity. I just have one question. So regarding our operating margins, so can we expect that the current operating margins at the end of FY23 should continue, or should we expect it to be more in the realm of high teens kind of a number? Yeah, that is all from my side.
This has already been answered, but I'll repeat that. So from current margin of 18 to 19%, we are targeting an EBITDA margin of 21 to 22% in the current year.
Okay, thank you. That is all I just wanted to add. That's all.
Yeah.
Thank you. Our next question is from the line of Karan Gupta from Varanium Capital. Please go ahead.
Hello. Yeah. Hi. Thank you for giving the opportunity. I have one question regarding the acquisitions we have in Australia and Tanzania and Ghana region. So what will be the expected cash flow we are estimating from that regions? Cash flow from operations I'm asking about.
For us, exclusive business considered as a whole, including all global manufacturing facilities. So current year we had cash flow close to 160 crores plus. So going forward, with the growth, we're expecting similar levels.
Okay, and what will be the growth?
We are targeted around current year.
Okay, 15 to 17.
15% plus.
Okay, 15% plus in volume terms.
Yeah.
Okay, got it. The next question related to future innovations we are targeting in defense sector as the innovations on the drone segment or the missile segment, rocket segment. So what will be the next thing we are targeting in the defense? And how we are it is 6%. I think couple of years it is stand still on 6%. So what we are doing
Your line seems to be disturbed. Can you connect again?
Hello. Yeah, just I want to ask question related to the defense sector, which is 6% from couple of years. So what is the next plan we are targeting, or the innovations, as Noel said, we are entering into the rockets or the missiles or drones. So what will be the next time how we are getting the orders to increase this 6% to maybe 10%?
We are not not able to clearly hear you.
Mr. Karan Gupta, may we request you to join the queue again as your line is not clear. Thank you. Our next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Thank you for giving me this opportunity. Sir, what is the margin in defense revenue and how many months we take to receive the data payment from defense and how many more orders we are expecting in current year?
So the working capital cycle for defense is normally higher than our working capital cycle for non-defense. But since we have been saying that once we start supplying the product, it get reached to the normal level of like explosives. So like we have started supplying of multi-mode hand grenade and other products. So we are not expecting that the debtor days or inventory levels to go beyond the normal level what we have been in the business for explosive market, explosive section. Second point, more orders definitely yes, like we have said that we are likely to complete all the trials of Pinaka in next couple of months. And once we complete all these trials, we will be getting more orders in this financial year. And there are plenty of RFPs in which we have already applied. But the cycle time from submission of RFP and getting orders always takes some time. So as of now, the total order book is 1100 crores. And once we receive more orders, we will update.
Defense margin, sir?
So as a business, what we have mentioned that in this financial year, we are targeting that our EBITDA margin should reach to around 20 to 22%. So definitely we are optimistic that we will try to, or we should be able to reach on the upper side of the EBITDA margins, which we have given a guidance on that.
Okay. And Manish, any defense equipment we are exporting to any other country?
We have already shared that we received orders of Pinaka rockets and which we are supplying. And there are small products which we are already supplying to various countries.
Okay. Thank you. All the best.
Thank you.
Thank you. Our next question is from the line of Aniket Mittal from SBI Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. I had two questions. The first one is on the realization front. I think during the quarter we've seen a 7% sequential dip over there. And you highlighted ammonium nitrate prices have gone lower. So based on the current prices, in your view, what would be the steady state realization that we can expect?
Like we have already shared that the current realizations of finished good depends on the current raw material prices. And like we have shared that in this quarter, the average realization of explosives was around 66,913 per ton. And in this financial year, we are expecting that the prices of raw material should fall, and that will benefit in increasing or enhancing the demand in the market. So at this moment, it is very difficult that how much it will fall, but like we have seen that it can fall and it can go up again also in the second half of the year. So in the first half, we see that there can be a drop in the finished good prices, and in the second half, we see that it can come back again. So we are not 100% sure at this stage how the volatility of ammonium nitrate prices can play. But as it happens, we will definitely share on quarterly basis.
Fair. The second question was just on the overseas markets. This year we've seen a very strong growth coming in. Revenues have almost doubled. If you could just highlight which are the key geographies which have contributed to this doubling of revenues?
Yeah, we have been saying that our businesses in Turkey has done exceedingly well. We have almost doubled the revenues from Turkey. Similarly, we have doubled our revenues in Australia. We have almost more than double in Nigeria. So we are doing very well in all these subsidiaries, except Ghana, where we are still in the nascent stage. So we are expecting better revenues in coming years, especially from West Africa and South Africa. And we are expecting that the more footprints which we have said, that from the current 8 manufacturing destination, we will start 4 new in this financial year. So backed up by all these efforts which we have taken in last couple of years, we will see that there is growth in overseas business even from the current level.
Just a follow-up to that, in your 15% volume growth guidance, how would this be split between domestic and international?
We give the growth guidance or volume guidance for basically domestic market. But as far as international market is concerned, definitely there will be also growth of around 15 to 20%.
Fair. Thank you so much. Those were my questions.
Thank you.
Thank you. Our next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. So my first question is this order book of 2,900 crores. What this will be executed over what period?
Next 1 year.
1 year, and this is both for the defense and the non-defense part.
So defense, as we said, we expect the revenue to double, so it may be for 1.5 years.
Okay, and the non-defense order book of 1,800 you're saying should be executed in 1 year.
This will include additional, as I said, we'll have additional orders from Coal India post-October. So we'll have additional order book for next 6 months.
Okay, understood. And the defense order book of 1,100 crores, is this including the Pinaka rockets? Because you said the product is still under evaluation. But you also mentioned that you all are exporting the product.
We have already received an export order of Pinaka, so that is included in the defense order book. So as regards commercialization and testing, that was for the domestic orders of Pinaka.
And is it possible to quantify that once the domestic testing is complete, what could the order value be?
Once we receive the RFPs and tenders are completed, we'll update the same.
Sure. And our target or aspiration for margins of 21-22% for FY24, will this be driven by faster growth on the defense side or because of growth on the export side? Just trying to understand which piece is more margin accretive and hence expected to give us relatively better margins.
Like we have already mentioned, that the improvement in margin will be mainly because of few factors like the increased defense business, improved overseas businesses, and the volume growth of around 15, and it can go up to 20% also in this financial years. So these things will definitely help us, and there were other factors which has impacted the bottom line in the FY23, which was mainly on currency fluctuation and impact of hyperinflationary side. So these things we don't expect to continue in the next financial year. I hope this will answer your question.
Yes, thank you so much. Thank you.
Thank you. Our next question is from the line of Sanjaya Satapathy from Ampersand Capital. Please go ahead.
Yeah, so thank you, sir. Thanks a lot for giving all the detailed guidance. So can I just ask you one thing, that considering how the raw material realization and many other things are fluctuating and all this currency, so based on your volume growth guidance, will your absolute profit grow faster than volume growth or not?
Yeah. So we've given a guidance of 15% volume growth, so we expect similar growth in our bottom line.
Okay, and this 15% is for explosive, not the defense part, right? Right, ma'am?
Agreed.
Okay.
For explosive, no, this is 15% growth for explosive and for the business as a whole.
Okay. I thought volume growth is something which is not related to defense. Understood. Thanks a lot.
Thank you. Our next question is from the line of Kaushik Mohan from Ashika Stockbroking. Please go ahead.
So thanks for the opportunity. Sir, another question that I have is that while looking at the numbers, consolidated level, the other expenses have been increased by 400 crores. Can you give the breakup if possible, and what is this exactly increased for?
As you see, for the fourth quarter, the expenses have gone up by about 62 crores. So that includes mainly on account of hyperinflationary losses. Turkey is a country economy. Hyperinflationary has been affected since the financial year 22-23. So as a result of the restatement of the balance sheet items of non-monetary items, there was a loss of around 48 crores that had to be routed through P&L as per Ind AS 29. So as a result, the expenses had gone up.
But for this,
around 2% plus at the beta level.
okay. So for this reason, this 400 crores hasn't increased, ma'am?
So this 400 crores we cannot quantify as compared to previous year, because if you see, the sales have also gone up by 75%. So in proportion, expenses also go up. Export and overseas has also gone up. So as a result, freight and forwarding also increases. And forex currency losses of around 80 crores are also accounted for in this year.
Got it.
Yeah.
Thanks for that. Thanks.
Thank you. Our next question is from the line of Chirag Muchala from Centrum Broking. Please go ahead.
Yeah, thanks, sir. So now that we have completed RECL acquisition, is it possible to share some financial details on the same, right? The capacity, revenue, profits, etc.
Yeah, like we have shared that we have acquired Rajasthan Explosives Chemical Limited. It is based out of Rajasthan, which is in the city of Dholpur. And this acquisition will help us to expand our market base in the northern part of India. And the explosive capacity is around 30,000 ton, which we are likely to increase in next 1 year time. And the company has almost a big range of products which we are already operating into. And the company's land is almost more than 900 acres. And this is what we can share. And as far as revenue is concerned, we have already shared that it is in the range of around 200 crores, and we are likely to continue this.
Okay. And sir, what is the consideration that we have paid for the same?
The consideration we have already done is around 70 crores.
Okay, sir. Sir, the second question is actually on ammonium nitrate prices. So is it possible to share the average price of Q4 and where it is currently?
We don't share the average prices of our actual purchase. Sorry for that.
Okay. Because sir, in Q1 and Q2, you had shared that ammonium nitrate is hovering between around 83,000 rupees per ton. So just wanted to compare that industry-wide where the prices are, not specifically for solar, but industry-wide AN prices.
All right. The current RCF prices is around 60,000 rupees, 60,000, okay, and which has reduced from almost 84 in the peak. It has reduced to 60,000 in the end of March.
Okay. Okay, sir. Yeah. Thanks for the answer.
Thank you.
Thank you. Our next question is from the line of Abhishek from DSP. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just in terms of your, initiating systems, the top line growth seems to be quite healthy at about 44%. And subsequently, your standalone margins are also very healthy. So is it also because of product mix, or how should one look at it?
Yeah, you are very right. It's a combination of product mix and the current impact which we have seen in the business, that we are increasing our footprints in various parts of the country. So that is helping to improve our realizations also. So it's a combination of various factors, and one of that is increasing initiating system sales.
Okay. So the other thing is, which you partly also mentioned, is that housing and infra demand seem to have gotten impacted also because of price increases. So with that normalizing now, with ammonium nitrate prices coming off, you think that segment can see healthy improvement from here on? Which, if I look at a fourth quarter number, you're virtually flat. So how should one look at that segment?
So we are expecting that the demand from housing infra so increase in this financial year. The key reasons are that in the last year, because of high prices of not only explosives but of steel and cement also, lot of work were getting deferred and payments were also slow from the various organizations. So in this financial year, we are expecting that these will improve. Apart from this, there is a natural buoyancy in this section because of government is also pushing for completing all the infrastructure projects as early as possible. So this will help in improving our sales from housing infra. But like from last 15-20 days, we are seeing that there are unseasonal rains. So these factors can keep coming, which can impact the demand. But on an average, we are expecting that demand for our explosives should be 15%, and we are trying to increase from 15 to 20% in this year.
Okay, great. So one last question from my side. Since you've increased the capex intensity to almost about 750 crores, and a lot of it is also going into defense, do you expect this capex momentum to continue into FY25 as well, or how should one look at it?
It is very difficult to comment at this stage, but definitely looking at the huge opportunities and the company's aggressive plans in expanding the footprint, expanding the product portfolio, invest in new technologies, products, which will help our presence in variety of customer sections, which can sustain the future expansion or future growth plans. So we believe that in this year we are expecting 750 crores, and in the next year we are should be around 600 to 700 crores.
Okay. And one should assume similar asset turn X of defense in these to continue. Whatever you are doing current asset turns, these new capex also should be able to earn you that asset turns. Is that a right assumption, sir?
No, this may not be right assumption at this stage. Like we have been saying that defense expansions, whatever we will do, it will take at least 3-4 years to turn around and then increase the sales from those assets. But like we have been investing in last almost 10 years, so we are getting the fruits of those investments. In this year, we are expecting a revenue of 800 crores, and with the current capex program, it can definitely with the capex which we have already done, the revenue should reach to around 1,200 crores comfortably. But like we are absorbing the new technologies, increasing the product portfolios, so the capex will be there, and those things will help us in the coming years.
Got it. Great, sir. Thank you so much for answering my questions, and wish you all the best. Thank you, sir.
Thank you. Our next question is from the line of Ishan Tosniwal from Polar Ventures LLP. Please go ahead.
Yeah, thank you for giving me the opportunity. As Manish, you said that we'll see 15 to 20% rise in the volume terms. Can you give me the breakup of the color of how much it would be towards the explosive side and towards defense side, and would that lead to the top line growth in the same ratio, or would it be higher because of the 15 to 20% volume rise? My first question.
Like I have already answered that the volume growth will be there in India and overseas business, and the growth will come mainly from Coal India, Singareni, and housing and infrastructure sector. As far as defense is concerned, this business doesn't work on volume growth of like 10, 15, 20%. These are mainly dependent on products, and each product are being numbered in a different manner. So SKUs are different, unit measurements are different. So for defense section, we have mentioned that in this year we are expecting revenue of 800 crores. We will try to increase it, but from 400 to 800 crores is out for this year.
And the capex that you have done is basically for what? It is for explosive, or the capex has been done for the defense part? defense part of our business?
CapEx program or CapEx which we
Yes,
have
yes.
already.
The CapEx program that you have given of 400 or 700.
We have given the breakup just now.
I just couldn't see it. That's why I'm asking.
We will share.
Okay. Okay. Thank you.
Thank you. Our next question on the line of Karan Gupta from Varanium Capital. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity. Most of the questions have been answered, but the question regarding the cash flow from operations, as of now, FY23, what will be the CFO?
Sir, a small request that can you connect after the Concall?
Okay.
Because your voice is not clear. Sorry for this.
Okay, sure.
Thank you. Our next question is from the line of Pratik Mukasdar from RNL Investment Partners. Please go ahead.
Yeah, Manish ji, congratulations to you and your team for a fantastic set of numbers. I wish you all the best for the future. Most of my questions have been answered, so thank you so much.
Thank you very much for your kind appreciation.
Thank you. Our last question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Yeah, hi sir. Thank you very much for the follow-up. Sir, just some clarification on our defense business. So we have recently got order in a lottery mission, and also we have a pending order from NMHG. We also have an export order. So the kind of revenue growth number in defense which you're talking about, 800 crores, that seems to be, primarily coming from these orders itself. Just wanted to check that is there any upside, because in the normal course of the defense business where we were doing some 300 crore kind of annual run rate, that business, how that panning out, and is there any upside of this 800 crore rupees revenue which you're talking about defense in the current year?
So like we said, the current order book is 1100 crores, and if everything goes well and if they buy out in this first year itself, so definitely we can increase our sales from 800 to 1100 crores. But like we have seen in our past experience, it takes time, and there are always some challenges keep coming, because you have already aware that this is the first time that any private company is supplying ready-to-use ammunition. And loitering ammunition has been ordered for the first time to a private company from the country. This has been developed for the first time. Similarly, Pinaka rockets have never been exported in the past. So this is also the new milestone for any company like our Solar Industries. So if you look and capture all these things, it takes time, and 1100 crore order book gives a lot of room of optimism that in the coming year we will see a much better performance from defense section. And this year we are comfortable that we should comfortably cross 800 crores.
Okay. I could just want more clarification. The guidance part which you mentioned is roughly 15 to 20% growth in revenue. That you are primarily talking only on the volume front, right? Because the prices this year will be falling because of the falling raw material prices. So this 15 to 20% revenue growth guidance which you're talking about, it's a volume growth, right?
No, whatever I have said is already said. You can look at my Concall script. That should answer your question.
Fine, sir. Thank you. Thank you.
Thank you. That was the last question of the question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you so much, everyone, for your time. We expect our shareholders and stakeholders to keep supporting us like this in the coming financial years as well. Thank you so much.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.